Okay, well, welcome everybody. Welcome to episode 7 of the podcast. And this week we're going to be talking about JP Morgan. We'll start with that. So JP Morgan executed their first sort of DeFi transaction. Maybe Jason, you can help us unpack that. And maybe for the folks who are new to the space, maybe talk a little bit about DeFi itself and the concepts behind it, and then let's talk about the JP Morgan transaction. And welcome.
Well, thanks for having me. Good to be back. So I want to put things in their proper perspective because I come from traditional finance. Right? And I remember in 1993, we made $52 million on the trading desk, making markets.
Right.
We made 600 markets. And there were approximately 30 people on that floor. So JP Morgan makes approximately 15,000 markets.
Right.
In various different securities, fixed income, equity, derivatives.
And that takes a lot of people to do that.
Yes, it does. It takes a lot of infrastructure also. And if you're the CFO of JP Morgan or Bank of America or Zions Bank, Mizuho, anyone who has a wheel is a hub that connects trading partners, counterparties, right?
Okay.
Knows what it takes to make markets. And a firm like JP Morgan looks at their annual fixed expenses to support an operation like that. And it's into the billions per year in fixed costs, right?
Right.
In the meantime, Uniswap makes 60,000 markets, right?
Right.
And they have less than 25 employees.
And it's because of blockchain technology. Like what is displacing the people? What processes, like what is it that's actually displacing, has the possibility to displace the people?
So they're automated market making contracts.
Right.
Right? So when I make a market, and I don't have to be part of the bank, anybody can make a market, right?
Right.
I'm going to supply $100 worth of USDC and then $100 worth of Ethereum. I'm going to set a bounding curve, which is the price band that I'm willing to buy and sell Ethereum for.
Okay.
I set it and forget it. That's it. Whereas when we made markets, we had to have machinery, we had to have middle office, back office, clearance, settlement, custody, IT, order management systems, and risk management.
Are these just, order takers, form fillers, negotiating?
Not when we made markets, no.
Yeah.
No, you used your gut, you used your brain, you used the wave of the market, you took risk, right? So when the CFO at JP Morgan, now I just want to say something. Several people have told me that I was crazy when I said banks are baking skunkworks projects in their basements right now. And if
No,
you
you said
don't
that a
think
couple of
that's,
episodes ago.
if
Yeah.
you don't think that that's happening, then you're a fucking moron.
Right.
Okay? So I said this to somebody about 2 months ago, and I want to give a plug out to BitDevs, right? Max and Justin have been running the longest running Bitcoin meetup on Broadway,
Right.
longest running show on Broadway in New York City. And there's this one gentleman who he's a corporate guy. He's a consultant now, and I told him, listen, it's going to happen. You're going to see an announcement or two or three within weeks. Within weeks. Not going to mention his name. And he was so skeptical. And I said, how could you possibly be skeptical? If I'm the CEO of Bank of America or JP Morgan, I'm looking at $6 billion in fixed costs to support a market making operation around the
Yeah.
world.
Yeah.
And then I look over the river in Brooklyn, and there's these, Hayden Adams and his crew
These
making
upstarts.
60,000, hold on 1 second, making 60,000 markets with less than 25 employees. Are you out of your fucking mind? You think they're ignoring it or cavalier about it?
Yeah.
There's no way they're
No
going to
way.
get away. No way. So what happened last week was there was a news announcement, right? JP Morgan announced that they executed a trade on Polygon using an automated market maker contract, right? With
Right.
Singapore dollars and they swapped it for tokenized yen. And there was market make. They made a market with an automated market making contract on Polygon.
Foreign exchange trade.
Yeah, it was an FX trade with tokenized yen and Singapore dollars, right?
Right.
You're gonna see these every day soon, and soon they're gonna be part of life, right?
And so I think what you're saying essentially is the CFO can't ignore DeFi blockchain technology because from their perspective, what we've already seen Uniswap do is basically demonstrate how that that infrastructure and the technology is going to give the banks an ability to get huge cost savings.
Why do I need 5,000 people around the world
Yeah.
for a market making operation?
Operational efficiency, cost savings.
Right?
Yeah.
That's number one. Number two, why do I need the infrastructure that those 5,000 people interact with? Right? That legacy structure. So they can't ignore it. They can't ignure it.
And it sounds like this was a pilot. So
it was a pilot, but look, when it comes to these, if they announced the pilot, which means they did a battery of tests before they actually got to this point.
Yes.
They announced it. The other thing is UBS floated a bond on the SDX, on the Swiss Digital Exchange. Also, that's another thing that happened, right?
Right.
A digital bond.
So we're seeing like the real, like traditional institutional players move into this space.
Yeah. So let me say another thing. While everyone was playing games and breaking the law, the banks are sitting back and they're building real world use cases, right?
Right.
And listen, guess what? The banks are going to get it all in the end because everyone was playing games. Now, there's a few people in crypto that are crypto native people, right? That will be household names. They're household names already. And they'll compete with the likes of Bank of America, JP Morgan, right? Morgan Stanley.
Right.
But while everyone was fooling around, And the regulators were looking. I mean, another thing that was announced is that 97% of the tokens on Uniswap are rug pulls.
What does that mean?
A rug pull, it's a scam, right? So everybody knows what to those who are listening, they know what a rug pull is, right?
Yeah.
Um,
So like a pump and dump.
Yeah. So is the SEC right? Do they have a righteous position when Gary Gensler shakes his finger and says hire a securities law and comply with the 85-year-old laws that we've had? Is he right? Guess what? A lot of these scamsters are going to prove Gary Gensler right.
Right.
There's not much the good actors are going to be able to do about it.
I noticed with this JP Morgan pilot, they did it using the Polygon blockchain. Why do you think the choice was Polygon?
Because it's cheaper than Ethereum mainnet and it's faster, right?
Yeah. And for
Plus,
this,
Polygon has a number of finance-focused use cases where we used to call them side chains,
right,
but you can create permissioned networks.
right.
And so banks can each have a permission network on Polygon and trade with each other, right? With Ethereum, you can't do that because it's a wide open network.
Right.
Unless you build your own side chain.
Right. So they can create a private network of banks, essentially.
Correct.
You alluded to the fact that while people were playing games and
let me rephrase that. Stealing from everybody. While they were stealing from everyone with scams. Okay?
But we have a pretty serious use case for NFTs with process control. Maybe we can transition to that and talk a little bit about that. When we talk about NFTs, we're not playing games. We're trying to enable some serious optimization in the financial reporting space and have some use cases that might be able to be applied in other industries. Can you share a little bit about when we say we use NFT process controls, what does that mean? And what
an NFT is a certificate of ownership on the blockchain. Right? So, and NFTs are being used for a lot of other things too, like tickets which shows memberships, right?
Yeah, access to.
But the punctual use case was, art.
Yeah.
But what we use them for is to represent ownership over process controls, over accounting, audit, financial reporting, analysis, and business intelligence, right? So on our network, a professional can create a unique process control that controls some element of financial reporting. And every time it's used by others on the network, they'll get paid a royalty, right?
Right.
The validators that prove that that process control works properly also get paid a royalty, right? And what they're used for is if you have a set of them and you arrange them, and you're an entity that's you're composing a financial statement, all these controls are used to construct a financial statement, right?
Right.
And then there are different controls that are used to reverse engineer that financial statement to make sure it's working properly, otherwise known as audit, right?
Right.
To make sure that it's correct, right? That it presents fairly in all material respects the financial and operating condition of a company at the end of a specific period, right? And then you have analysts that want to use or build and consume controls that make up a thesis to analyze financial statements based on an investment thesis, right? Or
Yeah.
some sort of business intelligence thesis, right? So if I want to analyze all of the competitors in a single industry to determine what the mean average remuneration might be, right? Especially in the equity grants, right? Stock compensation, equity compensation. You can create controls that analyze that, right?
Right.
It's all part of data aggregation, which if you ask anyone who's a data aggregator, they'll tell you it's extremely difficult because that information is filed with regulators, and the information that's filed is made out of a machine readable syntax that's part of the semantic web, right? This is not necessarily something that you can do with smart contracts because science hasn't solved that yet. Maybe it will one day, but they're also machine readable. And two, it's extremely complex and computationally intensive, right?
Right.
So, and financial reporting in its current state is not going anywhere anytime soon. And I'm not saying that the same way I was told banks aren't doing DeFi transactions anytime soon. These are regulatory specifications, right? That you make financial statements out of a machine readable logical syntax, right? So that's what we use NFTs for. So in our case, people that create controls will become popular on a network and they'll be at the top of the leaderboard, right? And they'll become known for creating good controls. You'll have validators that validate those controls, and they'll be popular and they'll be the top of the leaderboard, right?
Right.
So a new entity comes to adopt this. They're likely going to see familiar names. And they're going to likely choose controls created by people who are popular. The other thing is that the data that's outputted from their use is invaluable because you now know how many times that control was used, who it was used by, right?
Are these
What financial reporting scheme it was associated with, right?
right?
And all of the data associated with who used them, like a wallet address, who validated them, right? Their wallet address. So it's data that was never available before. It was a process that was never available before. And what we're enabling basically is the creation of a virtual machine for accounting, audit, financial reporting, and analysis, right?
Right.
So,
And do you think that the nature of these process controls is likely to be like fall into industry verticals? Like if I think about, some player in one organization in one industry that creates process controls, is it likely that it's going to be other people in that same industry that want to buy that control? Or do you like how I'm just trying to think of what are the scenarios in terms of what they're doing today versus what process controls will enable? Are we talking about a combination of formulas or macros, or like what is it that these process controls will sort of displace? And are they do you think that the development of them will be along industry verticals?
it'll be across all industries because all industries compose financial statements. All companies, reporting entities in all
Right.
industries, they compose financial statements. Now, there may be different reporting styles, right? A bank
Right.
different style than a tech company or manufacturing company. But a lot of these controls, they're really associated with reporting schemes, right? US GAAP, IFRS, UK GAAP,
Which are
Australia GAAP,
standard
right?
across all.
Standard, right? fact, we're not asking anybody to do anything that they don't already do now. The difference is instead of paying $500,000, depending upon the size and complexity of an organization, right? Large accelerated filers will pay up to $500,000 to compose financial statements every year, right?
Right.
Instead of spending that money, they'll earn money because they'll create controls or they'll own controls that are common across every reporting scheme, right?
Right.
When they're used, they'll earn a royalty from them. Plus, they can run Pacioli nodes, which will earn by contributing computational validation resources back to the network, right? Where you don't need a license to make an attestation, you will provide computational validation power back to the network and offset the costs and possibly earn a profit, whereas you were spending money before.
Can you just be a developer and create process controls or do you have to be associated with an organization?
No, you can be an individual accountant that's got, an Excel spreadsheet stuffed with formulas
that
you've had for years, that you use for all your clients. You think they're proprietary, and maybe they are to an extent. And you can take each of those controls, process them into Process Control NFTs, claim the NFT on the platform, let everybody use them, and move yourself from hourly fees and manual labor to collecting royalties.
Very cool.
Yeah.
So it could it's kind of like a Zapier in this context, or like a marketplace, essentially, potentially, for process controls could end up being what gets developed. And it's
there's an endless number of potential controls for business intelligence and analysis, right? For the US GAAP reporting scheme alone, there's potentially 60,000 controls, right? The average company uses 300 or 400 right now. Same with IFRS and many other reporting schemes, right? And the difference between, the NFTs that everybody knows and these is that there's the software, right?
Right.
That processes them while you're composing a financial statement, because you're using them to output and articulate and express financial state. And every time you use them, you have to pay, same way you would pay to for a license for software that achieves that. The difference is that the libraries are going to be huge, because the platform is going to be populated by professionals that are creating more and more of them that allow you to refine and add much higher resolution to financial articulation and expression, right? So when an accountant retires and he's got, let's say, 500 or 1,000 process control NFTs that he's created, and let's say those 1,000 process control NFTs earn, I don't know, I'm just pulling a number out of the air. Let's say they earn $250,000 a year. Well, now you can put a multiple on that asset, those assets, because they earn a specific amount of money every year, right? So if there's a 10 multiple or a 20 multiple or God knows whatever, that's
significant.
You can monetize an accountant's work, right? An accountant can now, instead of, sinking his money into a 401k or a partnership account at a firm, he could additionally create controls and have another nest egg, right? Now, when companies hire consultants to come in and create controls that affect financial reporting and internal audit and internal controls, that's a sunk cost, right? So it becomes a delicate balancing act between, amortizing the cost on a tax efficient basis without hurting your stockholders' equity too much, depending upon the size of your organization, of course. But now you can take those controls and supercharge your balance sheet. Where there was
So,
a sunk cost before, now you have a revenue generating asset that you can one day sell.
so practically speaking, what's involved in creating a control? If I'm an accountant, do I need to have a developer? Like, how technical do I need to be?
Well, the way we're developing the platform, you're not going to need to be a developer, right?
Okay.
So the Luca suite allows you to create controls, right? And as an example, you can take the accounting equation, even though
Right.
it exists already and it's ours. But just to illustrate, the accounting equation is equity equals assets minus liabilities, or assets plus liabilities, right?
Yeah.
So variation. And that formula gets transformed into the necessary files that are compatible with all of the other controls. So they're modular, right? So if you were to visualize what this might look like, and you're composing a financial statement, you're going to need P&L controls. You're going to need balance sheet controls, cash flow statement controls, and changes in statement and stockholders' equity, right?
Right.
Those controls. So the average financial statement of a large filer like a Microsoft or Amazon has a few hundred controls right now, right? So now imagine you being able to articulate in a machine readable way additional metrics that may be non-GAAP, right? You'll have
Yeah.
to disclose that these figures are they're not prepared in accordance to generally accepted accounting principles. But a lot of companies do that now already because they'll state earnings. These are non-GAAP numbers. Here are the GAAP numbers. Here are the non-GAAP numbers, right?
Right.
So and then when it comes to analysis, that's right. Business intelligence. Yep, it's probably a bigger addressable market, right? Because you have thousands and thousands of investment theses, and each one is different. And there are different ways that, if you use Excel, there's different ways that you analyze data, right? So
So you mentioned Excel. Is there an integration, for lack of a better word, in this context with the technologies um, that companies typically use today that may have these hundreds of process controls? Or let's say a company like Microsoft does want to do a pilot with Auditchain and has identified that they have these 100 process controls. What would what how would they engage with
So
Auditchain?
most people don't realize this. Maybe they do. I don't know. But Excel actually sits on top of a semantic layer, right?
Yeah,
It uses
when you do those macros,
it
right?
uses XML to
Yes.
communicate information. It uses XML to communicate logic as well as data, right? So Excel is a very powerful program, right? So on the web, you can simulate what Excel does by organizing the same semantics, the same semantic components using namespaces, as opposed to cells on an Excel spreadsheet. Each
Yeah.
control has a namespace.
And namespaces
Yeah,
are on
a
the blockchain.
URL is a namespace, right?
Right.
And
Right.
within that namespace, there are other namespaces. There are knowledge graphs, if you will, and
Right.
subgraphs, right? So now you don't need a localized version of Excel. You have a Web3 decentralized version of Excel where the controls are not housed inside of Excel only, but they're housed in the wallets of the actors on the network, and they're accessible through the interface. So you just pull them through and choose them, and you can do on our platform what you're able to do in Excel. The difference is that it's machine readable across the internet, and each one of those controls is ownable by somebody, right? So if somebody sees that there's, I'm an analyst, and I'd love to be able to immediately calculate net tangible book value per share on a fully diluted basis, right? Now, on a fully diluted basis, there's some work that goes into that, right? So you have to read all the disclosures that disclose all of the convertible securities, whether it's warrants, options, or convertible bonds, right? And then you do a calculation that converts them all and adds the total number of shares issuable upon conversion to the current outstanding shares to give you the fully diluted number. But you also have to consider the amount of consideration paid upon conversion, right? Or forgiven upon conversion, right? Because if it's debt, and you have to add that to your calculation in order to determine what the net tangible book value per share on a fully diluted basis would be, right? So on a fully diluted basis, you have derivations that have to be outputted first, right? And then you apply the result and those derivations to another calculation, right? So that might not be a single control. It might be a few controls that actually perform that function, because you're dependent upon the output of other calculations before you can perform the next calculation. So they're done serially, right? Not concurrently. So, so if to those who are listening, imagine having a decentralized Excel workbook, right?
Right.
Pull in these controls, and instead of cells, they're namespaces that are machine readable across the internet.
And what does the decentralization give us? What's the benefit in this context?
Well, the benefit one is to get the institution of professionals, accountants, build a virtual machine, and to move from hourly fees and manual labor, right, which they're dependent upon their clients for, right, and get them to build or to contribute to the development of a very, very complex virtual machine that covers accounting, audit, financial reporting, and analysis, right? So there's a benefit. Those that you consume that type of software and compose financial statements will also participate and reduce the cost of compliance to a profit center from a loss. Those same types of companies can create controls that generate revenue, right? And now they're assets, because when they sell them, they'll experience a gain on sale, right? And it'll supercharge their balance sheet. So now you're unlocking value that did not exist before, because you're a member actor of this decentralized platform, and you're contributing to the platform, and you're adding value not only to your own balance sheet, if you will, but you're automating a significant amount of processes that sometimes are very costly.
Do you think that individual investors could also use?
Anyone who understands accounting, reporting, audit, or analysis logic can create a process.
They could build their own. Sounds like it's time for a hackathon.
It is time for a hackathon. So we are calling all accountants. Accountants who are a little bit on the technical side, or who are, I would say, forward thinking, right?
Yeah.
We definitely want public company accountants, right? We definitely want accountants that understand the US GAAP, IFRS taxonomies, right?
Yeah.
maybe even accountants that understand where the flaws are in those taxonomies, because there are flaws, right? And we are going to run a pilot ourselves. And so people should stay tuned for that announcement.
Yep, sounds good. Anything else you want folks to understand about process control NFTs?
Well, anything that they want to know that we haven't discussed, we have a wiki, right? But I think I covered a significant amount. This is, probably a couple of episodes to cover.
Yeah.
I think that's
Well,
good.
I mean, I think it represents a huge, I mean, if you think about what JP Morgan did and what we're talking about, different things, but just representing huge shift in how companies do certain things, certain workflows, how they think about their workforce in the context of automation. I think it represents a huge shift, and it'll be interesting to see what happens. But to your point, the big organizations aren't sitting around thinking that blockchain is a fad. They're definitely in it and piloting and trying to make sure they don't get left behind, because there is no choice. Resistance is futile. Blockchain will be assimilated into, you know, into every organization. What do you think? Facts or not?
Everybody knows what I think already. I was
Yeah,
doing backflips 6 years ago.
yeah.
Looking at everybody, I'm like, if you think the banks aren't getting it all in the end, you are stupid, dumb, galactically stupid.
Well, I don't know if they're going to get it all, but I
They're going to
think,
get it all in the end. They're going to get more than enough, right?
but there are going to be players that were like the same way in the web, there were
Yeah,
web
FTX will be around.
first.
FTX will be around. Coinbase will be around. I mean, a handful. I honestly, Kraken, might be around. I can't think of anybody else. Sorry, I can't. Uniswap.
Well,
Uniswap will be there. Um, uh, and Aave and Compound, right? But a lot of them are going to die. I mean, there's 20,000 tokens on the board right now.
yeah, a lot of
Most of them are going to die, right?
yeah,
So,
it's definitely the era of, for those of you who are old enough to remember GeoCities and how the web evolved, we're definitely in a similar situation.
but anybody who thinks that programmable value is not really interesting to banks really needs to have their head examined.
It's absolutely, yeah, absolutely. Well, on that note, I think we'll bring a close of episode 7. Thanks for tuning in, folks. And thanks for joining me, Jason. And tune in next week for another episode and seeing what's happening in the blockchain space and what we're doing with Auditchain. And hopefully we'll have some news about how you guys can get involved, maybe a hackathon, maybe news on our pilots. So if you have any comments, comment in. If you're watching us on YouTube, we'd love to hear what your thoughts are. Otherwise, thanks for listening. See you next time.
Thanks.